Morena, ko Andrew Bailey, ho, no wanganui ho. Hey, just acknowledge Duncan just before he leaves, as he's going out the door. He and I have sat on finance and expenditure for quite some years, so you get to know good politicians and you get to know some that are not so good. That's from all hues across the House. So Duncan and I have worked pretty closely over the years, so that's good that he's here. And I congratulate him on being promoted Minister. Hey, first of all, thank you, Richard, and your team for having me, and also for you coming today. What a great morning. Lovely walking. I walked down here. It's just a gorgeous walk. Hey, first of all, just a little bit of background. I come out of the financial services sector. I trained initially as an accountant, but I owned a merchant bank, and I did merchant banking for about 30 years, both here and overseas. So I've sort of been involved in the industry. We did a lot of mergers and acquisitions. I've floated about 25 companies on the stock exchange. And I used to chair a financial planning company, so this is an area that I'm pretty comfortable with and obviously understand some of the challenges and some of the opportunities. So having this portfolio, and I've got a number of others, I've got small business, manufacturing and tax. We call it revenue, you call it tax. But so in the business sector, they're sort of an interlocking sort of group of portfolios. Hey, I like your slogan, grow the financial confidence and well-being of New Zealanders. It sounds almost like a National Party slogan. That's what it seemed to me. But look, there's no doubt we need an economy that's prosperous, and that doesn't just mean for a few, it means prosperous for all. And I note you've got a thing about life after licensing. For Duncan and I, it's all about life after the election in October. So we'll find out what happens then. Hey, and I'd note the point you said before, Richard. On Thursday, we got D-Day with the number of everyone moving to the registered financial advisor regime. I was just talking to good colleagues down there, John Boddicker from FMA. So it doesn't appear that we've lost a lot of financial advisors out of the system, which is good, unlike what happened in Australia, which you'll be more than aware of, how they just flooded out through poor implementation of the new rules. But hey, look, just in overall context, I said about making a prosperous economy for all. I think the North Island floods have shown how we need to be resilient and able to be agile to change. In my own electorate, Port Waikato, I've probably got 100 people out of houses. A number of them have been whammoed, I mean, with slips going through them, streams that have just flooded right down a whole range of them, and houses have been taken out. And I think part of that, in the wider context, we need financial advisors that are resilient, can move and can be very much aware and can adapt to change. And I think in the wider context, we've obviously seen what's happened in Silicon Valley. You've talked about that. But I think, we've seen the cryptocurrency changes it recently, and we've seen with what's happening with house prices dropping and interest rates rising. There's a need to have a good context for decision making. And I think also we need to identify and develop and manage the technological changes that are coming at a vast rate. Blockchain technology, and I think the relevance around that with AML, I'll talk about, AI and e-commerce, all in the digital economy, which means that you guys all part of that and will be instrumental in seeing how that first comes in and how you manage that as we go forward. But the important thing is we cannot leave elderly and vulnerable behind. I was actually did a petition around keeping checks in place for elderly people. There's about 20% of the population that have some form of disability, and a lot of older people can't access banking sector, and very concerned that we don't just assume everyone is young and loves jumping on a computer or phone. I think it's very important in our economy that we actually look after those vulnerable people, and particularly my 94-year-old mother who's since passed away. But the thought of her trying to do internet banking would have been horrific. Obviously, we've got the global changes coming down, and New Zealand's got to play its part in that. But look, I think the other big thing for your industry, and I think this is one of the biggest things for New Zealand, is about how do New Zealanders save enough for their future? I think there are, we've got some very systemic issues in New Zealand right now, but I think one of the biggest ones is about how do people have enough money when they retire? And when you think about it, the average amount of money in a KiwiSaver account is only about 28,000. And when people retire, the first thing they do is take half of them and buy a new car because they think they've earned it. So your part in that, and that challenge for New Zealand is a massive one, particularly when we've got about 1.2 million people who are not enrolled in KiwiSaver. And everyone thinks, we've got New Zealand Super at 60 billion and it's continuing to grow and they're doing a fantastic job of managing it. But the reality is it cuts in at 2034, 35, cuts in for a couple of years, goes out, comes back in. At most, the contribution of the New Zealand Super Fund is about 7% of total pension payments. So it's a big financial issue for New Zealand, but it's also a big social issue for New Zealanders as they actually move into retirement, and of course, as we're all getting older. So, hey, if we're lucky enough to win the election in October, one of the things I want to do is make sure we empower businesses and provide confidence to industry players, and that also means you. I am conscious that there has been a raft of changes coming through. And I think there are times when we may need to just pause and let us breathe. And one of the things that really worries me is that we've had a succession of commerce ministers, many of them with no background in the industry, and we have just seen these changes coming through, these new pieces of legislation. So case in point is the CCCFA, which in my view has been a disaster. We supported, and when I say we, and virtually the whole House supported the new changes to the CCCFA. But when the regulations came back, and that's only approved by the Minister, so the Finance and Select Committee never got oversight of those regulations. And we saw them go from 64 pages to, I think, 105. The rules that came back were just overbearing and out of date and totally inappropriate. And of course, Dr. Webb's had to roll them back just very recently, and I'm glad he's done it, but it shows that there's the need that those rules were totally inappropriate. And what we're seeing in the market is how people are now having a lot of difficulty accessing credit and going to the most worst type of credit lenders to get their cash to repair their cars so they can get to work. And then we've got the COFI, Conduct of Financial Institutions Bill. We actually oppose that bill. We don't think you need two codes. And one of the things, when I look at the financial architecture, we've got the Reserve Bank doing the regulated financial institutions, which include insurance companies, but also the banks and the highly regulated financial providers. We've now got CCCFA administered by MB and Commerce Commission. And then we've got COFI that's going to be administered by FMA. Two sets of codes. And I think there's a need to look at the architecture, and I've got some people starting to look at it. I want to be clear who has responsibility, which organisation you're responsible to if you're a financial planner or an insurer, who is the person or group that I'm responsible for, clear lines of delegated authority, and don't stop this cross sort of mix mash that we've now seeing in the market. And I think that's the first priority I want to deal with. The other thing is, if you think about productivity, there's a whole range of things we want to do about improving productivity. Long-term stuff through education, through the things like growing international markets, India, Southeast Asia. There's a whole raft of them. But one of the things is about unleashing the capital markets and actually supporting New Zealanders' businesses to grow. So I'm very keen to implement the capital market reforms that Marty Stern wrote back, I think, in 2020, particularly around the stock exchange requirements, because we need a viable stock market, but also in the private equity or expansion capital space. Look at how we use the funds that currently sit in KiwiSaver, ACC and New Zealand Super, and see more of those funds deployed into good, great New Zealand businesses as an expansion capital. And then, of course, we've got the early stage expansion. So what I want to see is a better continuum across the capital markets. So businesses, as they grow and need access to debt and finance, equity finance, have the avenues and have choices about where they go, and there's a robust and viable markets in each of those. And I think that's really important if we really want to drive our businesses forward and provide the opportunities. I spent years advising Australian pension funds or private equity funds coming into New Zealand to buy great New Zealand businesses. The opportunity is for us to do that and actually capture the wealth of New Zealand. And what better investor could you have? Someone with a 30-year lifespan, who's got that perspective, not an 8-year turnover perspective, and someone who's a passive long-term investor is a great outcome. The other thing is AML is a major issue. I am very concerned about it because it affects all industry. Of course it affects you, but real estate agents, lawyers, I know we've got some lawyers in the room, but it is overbearing, and I think there's a whole lot of opportunities around it. I've got a group working on that right now. I know the government's working on it. It seems to be taking an inordinate amount of time, but I think there's a real opportunity about using blockchain around that. I'm glad that Duncan mentioned open banking. We support that. It's inevitable. We need to bring that in. And I think my final thing is, I think we've just got to strike the balance between regulation and consumer outcomes. It is important we get that balance right. I know I've been to see the FMA, there's issues around things like wholesale investor definitions. And the last thing is about, in KiwiSaver, about this focus on fees. I'm concerned that we're going to end up with large vanilla type fund managers because there's a focus on fees. It should be value for money because different investors require different advice, and they will come to you for your reason, your expertise, your perspective. And I want to make sure that there is an ability for people to offer different people different levels of advice and not necessarily be tied down to fees. It's value for money with fees. So there's a big chunky issues I think we need to deal with going forward. I'm sure we're going to talk about KiwiSaver a bit more. But hey, thank you for being here with me and having me here today. Right.
Thank you, Andrew. That's awesome. You've opened the door to a lot of different conversations. Let's start with KiwiSaver. Will the new government look to mandate KiwiSaver, look to get more resilience in the way people save and better balance the short-term, medium-term, long-term savings idea?
Hey, well, unfortunately, I'm not going to announce new policy today. But hey, look, as I said before, it's just a pressing issue that New Zealanders save for their future. It's much more difficult to make some of those changes in a cost of living crisis. But my personal view is what we should be doing is looking at progressively increasing KiwiSaver contributions over time and giving people space and time to know that's going ahead. So you might only raise it by 0.5% every year or whatever, but as long as people have visibility around that. One of the things, as Duncan quite rightly pointed out, women are disproportionately disadvantaged from KiwiSaver, but I think also one of the things about KiwiSaver is that when the bill came in, when the Act came in, there was an intent that people would be asked to join KiwiSaver by their employers. One of the pernicious practices that you see and increasingly seeing is where, and I'll give you an example, and this is a real life example, and I had it happen with me on a couple of occasions, but particularly hairdressers. Young women who are going into that profession, obviously earning very low wage, and when they say they want to join KiwiSaver, the employer will often say to them, if you want to join KiwiSaver, you want me to contribute, I'm going to take it out of your wages. So what do they naturally do? They don't take up KiwiSaver. And then it's hard to get them back into it. So, I suggest it's a moral compass issue, but no one's doing anything illegal, but it certainly wasn't the intent of the bill. But I think inevitably over time, New Zealand's got to increase its contributions. It's just more a question of when and how we do that. And when you see even recent changes in Australia, they're raising their rates even more. It's at 3%, it's pretty low.
Yeah, I think that's our challenge. And of course, talking about retirement adequacy, a lot of our research kind of talks about KiwiSaver, as you say, around 30-odd thousand. You got NZ Super, and if people have own their own house, then they're in pretty good stead. But that's really not always happening.
Well, the trouble is only 50% of people own their own house.
Yeah.
So, and then I obviously advise many people who own businesses, and those 1.2 that are not in KiwiSaver. I didn't have KiwiSaver when I was a business person, because the assumption is you're going to sell your business for a fortune. Yeah, right. Not everyone sells their business for a fortune, right? And, when you think about what's happened now with COVID, if you think about many of the people who've owned tourism-related businesses, my taxi driver lost his business, not through his own fault, but through COVID. And now we will have a generation of people, business owners, who are doing pretty well up to 2020, who are now going to have to work into they're 75, 80 years old to try and get back and try and get enough savings. It's a pretty appalling prospect, really.
Andrew, last question for you. The next 6 months, play out the next 6 months. How's it looking? How's the spirit inside the National Party? What does a 6 month out from an election look like?
Hey, well, I think we've got a good team. And we're excited. What we do need to do, and I recognise this, is we need to roll out policy. We need, there's generally a tendency to do most of it during the election period, but actually we need to start to roll out policy. Chris Luxon obviously announced our early education one Sunday before last, and we did 3 big policies last year. We did our tax one, which is saying we will adjust tax thresholds to take everyone back to what they might have been paying or should have been paying back in 2017. And that's worth about $1,000 per family. Together with that early childhood benefit, that's about $5,000 per family. The second one we announced last year was how we get people off benefits into work, which is a major problem. We've got 130,000 people on the job seeker or unemployment benefit. And the third one was how we deal with these young kids who are driving down the motorway, take them away, fix up their teeth, get them in, teach them a skill, maybe a bit of education, and then after a period of time, ask them to go down, maybe go and get a fishing job on the West Coast, get away and break that barrier or that thread back to the family so they can actually start a new life with all the skills that they need to move forward.
So there's lots in front of us, and a really good debate to have. Plenty of debates we didn't get into, but look forward to continuing to work with you and your team over the next 6 months. Folks, on behalf of all of us here, a big thank you for Andrew joining us this morning.
Thank you very much. Thanks, Brian.